Hello and welcome to Rush Hour with me, Sumit Chaturvedi. Let's begin with Tata Motors results. It's a healthy set of earnings for Tata Motors in fourth quarter. While revenue was in line with what we were penciling in, profit, it beat expectations at 8,470 crore on a year-on-year basis. Srishti Sharma is joining with number crunching.
The numbers look very good coming in from Tata Motors this time around, and especially look at the margins, because on a consolidated basis, the margins are on the positive side. But apart from the numbers, the big commentary and the big headline is that the company has now turned into the net auto cash positive in FY25. The company has delivered and achieved the target that they have given earlier, and for now the net cash balance stands at over 1,000 crores is what the company is highlighting. On to the number front, well, of course, though the revenue has come in line to what we were expecting, but a consolidated margin surprise is what we have witnessed. 13.9% is the consolidated margins, and even the profit figure has come in above to what we were expecting at 8,470 crores. Now when we come to the segmental performance, the JLR EBIT margin has come in line at 10.7%. The passenger vehicle margins are a little better than what we were expecting at 7.9%, while the commercial vehicle margins stands at 12.2%. But specifically, let's look at the commentary, especially from the JLR front, because that's where the action has been happening with respect to US and UK specifically. These particular markets, the company does say that the tariff and the related geopolitical actions are making the operational environment uncertain and challenging, though the company does welcome the deal that has been announced between the two nations. But the global premium luxury segment and the Indian domestic markets are expected to weather this relatively better, is what the commentary is on that front. When it comes to the commercial vehicle business, then they anticipate a sustained growth despite the global headwind, while for the passenger vehicle outlook, and the outlook does remain on the positive side, but the EV business was a bit positive at 6.5%. And also on the JLR outlook, the company does continue to evaluate the impact of the global challenges and will provide an update at the Investor Day on 16th of June 2025. As of now, the planned investment for the next 5 years stands as it is. So all in all, good set of numbers coming in from Tata Motors, and also the management commentary. Back to you.
Firstly, we welcome the India-UK FTA as well as the US-UK tariff change that has been announced by the President and the Prime Minister in the UK. First, take the US versus UK tariffs that were brought down to 10%. We await the fine print in terms of timings. When does it change from when? We also need a few clarifications in terms of what does it do to parts and accessories. But directionally, it's in the right track. Obviously, situation is much better than what we were facing before. But I think we will need to wait for a few days before the final clarifications are issued in terms of notifications and the changes that are there, whether it's applicable retrospectively or not. So those are the things that we await. As far as India-UK FTA is concerned, I think that's again a great development, and it augurs well for JLR. At the same time, we also await when the FTA actually comes into force, but we believe this is going to benefit the future cars that are going to come, which means customers will be able to access these global cars at global prices much faster because of this FTA, and therefore it augurs very well for continuing to drive JLR's performance in India.